Mr. Amir, for the introduction, and good morning, everybody. Assalamualaikum warahmatullahi wabarakatuh. It's my pleasure to be here to share with you about the topic of risk and compliance. I believe. Can you project my slide, please? I believe I can just start my material without introducing myself again, because I have been introduced very nicely by Sister Amelia. I hope everybody, I believe my material is quite advanced, but I'm trying to make it very simple and easy to understand. Can you project my slide, or I should do it here? If I, oh, okay, I can do it from here. Can everybody look at my slide?
Yes, sir.
Okay. Okay, let me start. So we are going to discuss about risk and Sharia compliance in Islamic banking. Yeah. So risk is very important nowadays because of what? If we realize that some of financial crisis, 1997 into 1998, economic crisis, and then 2008 into 2012, what we call it global financial crisis, and currently a pandemic. We tend to say it crisis only because pandemic is not coming from economic aspect. It comes from health sector, but from health, it separates to other sectors, including economic and finance. So risk is very important. Yeah, because of what? Because risk sometimes and mostly determine the performance of economy and finance itself. That's why in Islamic banking, particularly like Islamic financial institution, they do care about risk. So that's why we are going to discuss this morning about risk in Islamic jurisprudence and what is the Islamic mechanism in risk management. Yeah. But before that, we need to understand what is risk. This is very important, my beloved participants, because sometimes if I ask my colleague, what do you think about risk? What is the difference between Islam and conventional when we face risk? Yeah? Risk in Islamic finance is defined as gharar, uncertainty, yeah, in Sharia, in Islamic finance. There is no specific term in Quran saying about risk. So the Sharia scholars tend to define risk in terms of gharar. Yeah. That's why gharar is uncertainty or ambiguity. Because of what? Because of lack of information or lack of control in the contract. So basically two types of problem coming from risk. Yeah? If something is having lack of information, it creates risk. And if we cannot have control to the contract, control to the product, it creates risk as well. And then by size, there are big risk, yeah, or we call it gharar fahish, and there are also some gharar yasir or small gharar. Yeah, there are various types of risk, but we define them as only two categories. Yeah, big gharar and small gharar, based on size. And then gharar fahish or big gharar should be controlled and minimized. So this is the important one between, and the one that we can understand what is the differences between Islam and conventional, or Sharia and conventional, when we face risk. In Islamic finance or in Sharia perspective, risk should be controlled and minimized. But in conventional, risk is eliminated and transferred. Yeah. These are totally very different. Yeah. If I can repeat, in conventional, risk is eliminated or transferred. Yeah. But in Islam, risk is controlled and minimized. Risk cannot be eliminated. We cannot hinder, for example, from pass away. Everybody will die. We cannot, no, I want to live forever. You cannot. That is your risk. Yeah. Risk of having sick. For example, if those of you are having sick because of pandemic, that is your risk. That is our risk. We cannot avoid, oh, I don't want to be sick. You cannot. It is your destiny. So that is the risk. What we can do is to minimize. If we are impacted by COVID, take some medicine, have a rest. We minimize the impact until we recover. That's what we can do. But in conventional, risk is eliminated and transferred. That's why conventional risk is haram. That's why conventional insurance is not allowed. But takaful is allowed. Because takaful doesn't eliminate risk and doesn't transfer risk. How can we transfer risk? For example, we have a risk of becoming sick, and then we transfer this risk to anybody else. Cannot. I don't want to be sick. The risk of sick is transferred to my colleagues. Cannot. So it is natural. And then goror yasir or goror small goror has characteristic. Firstly, negligible, yeah, and inevitable and unintentional. Negligible, we cannot avoid it. And we cannot avoid. And then inevitable, sometimes we do not realize, oh, this is the risk. We don't want to, but that is the risk that we need to bear with. And then unintentional. We don't have any intention to have this. For example, accident or like flooding, banjir, flooding or earthquake. We don't want. Who wants to have earthquake? Nobody wants to have earthquake. But this is the destiny, takdir in Arabic. So we don't have. We don't want to, but it is a takdir. That is a risk. But if it is unintentional, we can consider it as a minor goror or small goror. Yeah. And then goror fahish, by behavior, they are natural goror and created goror. Natural goror means it happens naturally. For example, if we do business, yeah, we open a store, we open a business, supermarket, for example, we open a new office, and then we want to do business. And of course, we are going to have two risks, risk of having profit or risk of having loss. Yeah. It is natural. Because of what? Because of doing business. Yeah. Or another one, the third one, break even. We are not facing risk, we are not facing profit or loss. What we have is only break even. Yeah. So that is natural. Because of what? Because that is natural business. We do not do any speculations, so any goror, any, what is it, a gambling. And then created goror. The second one is created goror. We create the gambling. We create the uncertainty. Yeah. We create money game, for example. Yeah. So what is the exact example in business, for example? Rather than opening business, opening restaurant, opening store, opening supermarket, opening office for business, let me just, for example, go to a nightclub or to casino to play a game. Or buy some currencies in the market and play a speculative motive. So let's wait for the fluctuation of the currency. I want to play with the game, money game, for example, or buy Bitcoin or buy cryptocurrency. I want to play a game with this fluctuative currency, for example. It is created goror. We create the uncertainty. We are not avoiding uncertainty, but we come to uncertainty. And then what should Islamic bank do? Islamic bank may not do and must avoid this created goror. Yeah, we cannot we cannot have or we cannot make created goror because it is creating a problem. We cannot make a gambling. We cannot do gambling. We cannot do speculative motive and everything because that is not allowed. And then risk management. So we are now getting deeper. Yeah, risk management in Islamic banking deals with minimizing lack of information and maximizing control. So if someone is asking you, what should Islamic finance do with the risk? What is the difference between Islamic finance and conventional finance when they deal with risk? In Islam, in Sharia, we minimize lack of information and maximize control. That's what we are doing with risk. We are not eliminating risk and we are not transferring risk. What we do is to minimize, like the one we face during the pandemic, we take vaccine, right? We take booster because of what? Because to minimize the risk. We cannot avoid if the virus is coming to us. That's the destiny. That is your takdir. We take medicine. So before that, we minimize the risk. We take vaccine to minimize the risk, and we maximize control. Maximize control. For example, we need to have collaboration, coordination, negotiation, communication, everything in business. So we don't want to have uncertainty or intransparency in the business. So what we do is profit and loss sharing, for example, al-gunmu bila gurmi, there is no profit without risk, al-kharaj bidoman, there is no obligation without return, for example, positive or negative sum gain. If there is a return, we share. If there is a loss, we also share, profit and loss sharing, cooperation and coordination and Sharia compliance business activity. So these are maximizing control. Any question from the first part? That's what we deal with the risk from Islamic perspective and from conventional. And then how do Islamic finance deal with this? Should we continue? Okay. So what is risk management in financial institution? Yeah. Risk management determines the successfulness of financial institution in managing funds and providing well-expected return to the stakeholders. So risk management is not only relevant for conventional, but also for Islamic banking or for Islamic finance, any type of financial institution, and not only banks, but any type of financial institution. So when a bank, for example, Islamic bank manages risk very well, it can also manage or control the successfulness of their business, because risk needs to be managed, risk needs to be controlled and minimized. And then it prevents a bank from financial failure, mistake by doing business. Insolvency is the inability of a bank to fulfill their obligation to the third party. That is insolvency. Liquidity distress, a huge demand of liquidity, huge demand of money. It is called liquidity distress. And build good communication with the stakeholders. So risk management is very important. Unless we are going to have a problem if we do not manage the risk. And then risk management can measure and explain every type of risk, which will allow banks to take necessary action to anticipate and mitigate any risk. We are going to talk about diversity of risk later on. And then in general, it is necessity for the robustness of the overall financial system and economic stability at the end. Yeah. For example, during the pandemic, it started from health problem, yeah, but then it separated into economic finance problem and later on social problem. Lastly, last but not the least, is political problem. If you see in Sri Lanka, one of the causes is pandemic. Because of the pandemic, and then they need to import a lot of commodities, but they don't have enough reserve. And then the country becomes bankrupt because of the pandemic condition. And then the president is going away, run away. And then the people are, hijacking the palace of the president and so on. It becomes a political problem now, starting from health problem, which is pandemic. Is the danger of ignoring the risk. Risk management unexceptionally becomes part of Islamic banking institutions. But Islamic banking has some uniqueness. Yeah. Yes, we are Islamic, but we also bank. So there are some similarities, there are some differences between Islamic bank and conventional. And then risk in financial terms is usually defined as probability that the actual return may differ from the expected return. We are going to see this one. You see this graph, this picture? Is it clear? Can someone speak to confirm me? Do you see the picture?
Yes, sir.
Okay, good. So if we look at this one, if we classify financial and business risk, there are at least 3 types of risk: financial risk, business risk, and operational risk. Yeah. Under financial risk, there are credit risk, market risk, and liquidity risk. Yeah. Under business, there are management risk, strategic risk. Under operational, there are a lot: people risk, legal risk, systemic risk, external risk, equity investment. Islamic banks deal with these type of risks, except Islamic bank may not have interest rate risk. Islamic banks may not have speculative risks because those are haram. Those are not allowed based on Sharia principle. But the business risk, Islamic banks, of course, the same one with the conventional one. Yeah. And then people risk the same as the conventional. Legal, we also face the legal risk. And then during the pandemic, post-pandemic, now we are facing post-pandemic, we are having another risk called cyber risk, and then what is it? Transparency risk, and then digital risk, various type of risk. So types of risk in banking. Risk can be, now this is the one that I just mentioned. Risk can be expressed within visual and interactive system. So beside having individual risk in a contemporary condition, it is interrelated, causality. So it is interactive system. We cannot isolate one risk from another. For example, as I just mentioned, the risk comes from health, and then it impacts the quality of life, and then it interrupts the business. Supply and demand will drop because of the pandemic, because of the virus, social distance and everything. So economic condition is slowing down. Of course, there are a lot of, fired, a lot of unemployment. So it creates another social problem. From social risk, there is political risk and everything. So the risk comes from one aspect, but it goes to other aspect. It creates and it causes other risk. Financial risk is exposure that result in direct financial loss to the asset or liabilities of a bank. Besides credit, market risk, and liquidity risk, Islamic bank face equity investment risk. So credit risk relates to the performance of entrepreneur, failure to fulfill the payment, obligation, settlement, clearing, and so on. So if a bank, for example, has a problem in lending, but there is a problem in financing the project, and then it can be classified as credit risk or the poor performance of the entrepreneur when they do business. Market risk, of course, it happens because of market indicator, unfavorable price, economic condition, rate of return, exchange rate, inflation, everything, including Currently, we have pandemic risk. We have LIBOR elimination. London Interbank rate is now eliminated. It creates a problem in market and everything. A lot of issues. Climate risk also creates lately a market risk. Liquidity. Liquidity has two parts. Liquidity of financial instruments in financial market or liquidity inside the bank. For example, when a bank is having sukuk or Islamic securities and they want to sell sukuk in the market, but the market is not developed, nobody will purchase the sukuk. So that is liquidity risk because of inability to sell sukuk. Another one, liquidity inside the bank or liquidity related to solvency. The bank cannot meet the obligation to the depositor. We want to take our money from the bank, for example, and then the bank said, no, excuse me, sir, we cannot give your money back. That is liquidity risk coming from inside the bank. Business risk. It relates with the performance of the bank business and internal action. For example, the policy, infrastructure, payment system, everything. If there are some problems with this, it creates business risk. The business risk deals with management risk, which are how is bank planning, organizing, monitoring, reporting, strategic risk, everything. So the management of the bank is very important. Yeah, the management, the board of director, board of commissioner, and then the staff, the supervisor need to go together to manage, to plan, to organize the bank activities. Yeah, that is called business risk. Operational. Operational deals with some risks like people, system, legal, external, and some others. For example, if a bank doesn't have someone who understands Islamic finance, but they are Islamic bank, how come? The Islamic bank doesn't have Islamic finance people, doesn't have Sharia scholar, doesn't have ulama to give them, to direct them about the principle of Sharia, principle of fiqh, muamalah, for example. That is people risk, for example. Or they are missing the director. There is no director for Islamic banking, for example. And then that is a problem. A lot of problem coming from people. Or currently when people do not understand how to operate a platform, digital platform, they are not comfortable in using cell phone. That is people problem. Legal. If there is no act, there is no Islamic Banking Act, there is no Sukuk Act. But luckily in Indonesia, Alhamdulillah, we have had our Islamic Banking Act and Sukuk Act. But in other countries, they may not have. Also system is very relevant, digital system, technology. They also can create risk if there are some interruption in the process. External risk, risk coming from the client, security, supervisory, and everything. Yeah. External tends to be the outside of the bank problem. Yeah. Riot as well, riot, flooding, earthquake, everything, calamities can be considered as external risk. Equity investment, it comes from the asset, pricing and valuation of the asset. Markup risk. So in Islamic bank, usually when someone is coming to the bank to have financing, for example, to purchase motorbike or to purchase a house, rather than giving them loan in Islamic bank, the bank will purchase the house and resell the house to the client and then have a markup, have a margin. So there is a markup risk because, for example, the markup is too low or too high. It is the problem, especially if the tenure of the financing is too long. So they face economic risk. Yeah. Commodity price risk. If the price of the commodity is rising or the price of commodity is dropped, there is a risk. So Islamic banks need to precisely calculate the price of a commodity and then charge the margin, for example, extra return to the client, which may not harm the client, may not disadvantage the client. It is commodity prices. Legal, I've mentioned already. Withdrawal. Withdrawal is the risk of taking away our money from the bank, not only conventional, but also Islamic. The case that usually happens in Islamic banking is the one that we call displaced commercial risk, in which depositors ask, for example, we come to Islamic banks, we take our money from Islamic bank and we put them in conventional one. Because of what? Because we look at conventional interest rate is higher than rate of return in Islamic bank. So for those who are rational depositors, they don't care about riba. They don't care about interest rate. Whichever give them the highest one, the higher one, then the Islamic, they will go there. They don't care whether it's Islamic or not. As long as I have a lot of return, I have higher return than others, I will take my money and put to the bank which gives me higher return. So that is displaced commercial risk. Fiduciary is the trust from the public with Islamic bank. For example, we trust usually because if we are depositors of Islamic bank, we trust our bank. If we find our bank is having, for example, corruption case in Islamic bank, it reduces our trust. The one that is viral now in the media, I don't want to mention the name, but there was, a social institution which doesn't manage the social fund well. It becomes a huge issues in the market, in the public, because they do not manage the social fund very well. It's sometimes or the public expect or express them like a bit of corruption or misuse of the money. And then that is create a fiduciary risk, meaning the distrust from the public with the performance of Islamic financial institutions, banks or non-banks. Pandemic risk, as you know, there is a risk coming from pandemic. I don't want to detail it because you know it better. Digital risk, it is the one that I also mentioned, the risk of depending on computer, depending on internet access, depending on cell phone, depending on a lot of digital technology. If there is a problem with digital, so it may stop the people activities. That is the risk of having a lot of digitalization in the country, for example. Yeah. So we need to be aware with this. Yeah. That is the second part. Any question? We are going to go to the specific Islamic one after the second part, which is explaining what is risk, what types of risk, what are differences between Islamic risk and conventional risk. Okay, let me continue with the third part, Islamic banking principles, internal, external factors leading to risk. So this is very specific now. When Islamic bank deals with risk, yeah, they are going to have some issues. Firstly, Islamic contract require depositors, the public, the depositor, the client, to fully understand the consequence of dealing with Islamic bank. Someone cannot expect for return because return in Islamic bank is uncertain depending on the performance of the financing or performance of the economy. So return, especially if it is under mudharaba or musharaka contract, it is uncertain. We cannot ask the bank, what is the rate of return? What is the interest rate? The rate of return is later when the project is done, when the project is producing any return. So we might know what is the rate of it. And we cannot ask or we cannot request for guarantee about the amount of the deposit. No periodical withdrawal. We cannot take my money or your money anytime. It may harm the activity of the bank. Islamic Bank mitigates the risk through risk sharing with depositors and entrepreneurs, particularly profit and loss sharing or return sharing scheme. So this is the uniqueness of Islamic one. Yeah. Rather than, of course, Islamic banks are not applying interest rate. We apply profit and loss sharing, and we apply return sharing. In Indonesia, we call it return sharing. Internationally, they call it profit and loss sharing, but not interest, of course. And then risk in Islamic banks also come from economic or financial market risk, yeah, which are the pure risks. So we cannot minimize, we can only minimize, we cannot hinder from this risk, can only minimize, avoid, or handle the risk properly. Yeah. And then regulator coordinates and design proper legal and regulatory standard to control and manage performance of Islamic banking and preventing any unfavorable economic condition. That's what regulator can do. Yeah. So this figure is very interesting because it shows us how Islamic banks, depositors, business partners, economic condition, and regulators together deal and manage risk. For example, depositors, when they apply risk sharing, it can eliminate withdrawal risk, displace commercial risk, and liquidity risk. Inside Islamic bank, if they adopt risk management in Islamic principle, they can manage hopefully people, legal, reputation, external and equity investment risk. The business partner, if they apply Islamic principle, they may avoid credit risk, default risk, counterparty risk, settlement risk. And banking regulator, in our case, OJK, for example, and Bank Indonesia, if they apply Islamic risk management, they may avoid legal risk, supervisory risk, systemic risk, and monetary risk. And then, of course, there are some problems when Islamic banks manage risk. The first one, or the first challenge or problem, every Islamic contract should relate with the performance of the real sector. Yeah. So this is unlike conventional, in which they do not rely upon real sector 100%. In Islamic, all of the return should come from economic performance. The profit sharing, return sharing are coming from the real output of the business. Yeah. So every Sharia contract connect or relate with the performance of the real sector. If economy is in a crisis, there is no return, no profit sharing. If the bank's business is having loss, there is loss sharing. That's the fact. That is a consequence of Islamic banking operation. Market risk applies directly or indirectly in every Islamic contract. And usually due to the early stage of development of Islamic banking, they, in many cases, have lack of infrastructure, lack of technology, lack of population, lack of eligible human resources, lack of product innovation, and so on. It happens anywhere in the world, because I believe none of the world now is having well-matured Islamic banking industry. Usually just a couple of decades, but not hundreds of years, for example. It is unlike conventional. Even though we, of course, we do not apply conventional, but in terms of the age, conventional is much matured than Islamic. But doesn't mean that Islamic is not good. We are good, we are growing, but in terms of the age, conventional is older than Islamic bank. And then Islamic banks are free from interest rate, but indirectly can have an impact from interest rate. That's the third part. Any question? Can you hear all of my voices? Or is there any problem with my connection? No problem?
Now it's clear.
Okay. Alhamdulillah. This is the fourth part. What is Sharia compliance in Islamic banking? Yeah. Because one of the topic is not only about risk, but also Sharia compliance in Islamic banking. Yeah. So when we talk about Sharia compliance, we need to understand what is the function of Sharia compliance and what are the roles of Sharia compliance. Yeah. IFS is the Islamic finance entities or the player, or Islamic banks, we can call it Islamic banks as a simple term, must have in place Sharia compliance function that is competent, empowered, and adequately resourced to discharge its duties. So meaning, for example, every Islamic bank should have Sharia scholar, should have ulama, yeah, should have someone understand Islamic Sharia principle. Or we call it DPS, yeah, Dewan Pengawas Syariah. It is a must. And then Sharia compliance function is an integral part of Islamic banking governance and control structure. So none of Islamic bank do not have Sharia scholar, Sharia governance, or Sharia compliance, because it functions to facilitate the management to ensure that Islamic banking is compliant with Sharia principles, rules, and in a day-to-day operation. Otherwise, it is conventional. Can you imagine if Islamic bank doesn't have Sharia scholar? So how can we ensure that they are complying with Islamic if they don't have Sharia board, for example? Next one, Sharia compliance is the responsibility of each individual. Every single person in Islamic bank or other Islamic non-bank financial institution, for example, in Islamic cooperative, Islamic insurance, whoever or whatever the institution, they must have Sharia compliance, and it is responsibility of every single person. Yeah, the director, commissioner, supervisor, staff, Sharia board, anybody. Yeah, this is responsibility of anybody in Islamic banks. The function of Sharia compliance therefore needs to be integrated with each organ and function of Islamic banks. So it is a broad term which includes the mechanism of ensuring Sharia compliance. So it should be integrated, cannot be separated. It is part of the banking operation. It is part of banking governance. It's part of banking control. So it is integral part of banking operation. Next is a general principle. Islamic banks shall adopt objective and risk-based monitoring of material risk related to Sharia non-compliance. It doesn't mean that if an Islamic bank is operating under Islamic principle, then they may not have a risk of having non-allowed return, for example. They might have, for example, penalty. Penalty is not allowed to be collected based on Sharia principle. They can be collected, but need to be distributed to the public. Penalty cannot be the part of the income to Islamic bank, for example. And of course, Islamic bank may not apply interest-based, but from conventional, as we are living together with conventional, we might have indirect impact of interest-based system from the conventional. So we need to manage the Sharia non-compliance risk. Yeah. And then, for example, our depositors is doing speculation under Islamic bank. Who knows? Who knows the intention of the person? So they use Islamic bank as the media to do speculation, for example. So that is Sharia non-compliance. Sharia non-compliance, SCD, is principally the part of management and shall be reported to and accountable to and evaluated. Need to be managed and evaluated. In order to ensure the effective Sharia compliance, it is important that SCD, Sharia compliance deposit mechanism, works in close coordination with and under active supervision of the SSB, Sharia Supervisory Board. And SCD shall remain independent from business operation. Yeah. So, for example, one Sharia scholar cannot be intervened, cannot be influenced by someone when it is not allowed. He or she needs to say, this is not allowed. Based on Sharia principle, this is not acceptable. They need to be independent. And then some primary function of the Sharia compliance division or a department, for example, need to ensure that they are going to review and provide Sharia-related input for development policies. They are going to review business transactions to support the Sharia Supervisory Board to develop Sharia compliance program, and then to provide assistance and input to the business side of Islamic Bank. That is the last part. Any question? Why are we very quiet? Is it clear or not clear? Internet problem or what? Any question? Those are all of my material. I wish I could have discussion with you. Or is it clear? Why are you all off cam? Can you hear my voice?
Yes, sir.
Yes, sir.
Okay. Is it clear or not? Can you share with me how is your understanding now about risk in Islamic bank and Sharia compliance management or function in Islamic banks? At least you have my number, so anytime you have question, you have something to discuss, you can also free contact me. No question? I think the moderator, if there is no question, should I close or what?
Maybe we can next to the documentation if there's no question.
Okay.
So you guys can open the you can open
Video.
the camera.
Camera, yes.
So guys, please open the camera, guys. Okay. Okay, maybe I will document this in 1, 2, 3. Okay, once more. 1, 2, 3. Okay, and then second slide. 1, 2, 3. And the last slide. 1, 2, 3. Okay, so that's all from the today's class. And thank you for Dr. Rifki Ismal.
Thank you so much.
Because of the attractive material. Hopefully it can help us to have a better understanding about the material. And now we're turning to the last agenda is closing. As the master ceremony, I do apologize for any mistaken during this event. Finally, I would like to say thank you. Before you guys leave this Zoom, if you have any question, you can ask Dr. Rifki Ismal in his WA. And also, thank you for joining this event and see you in the next event. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam.
Thank you, Ms. Amelia. Thank you, everybody.
Thank you, Doctor.
Thank you. Assalamualaikum.
Wassalam.